This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In today's video, I'll be going over the data sets, the earnings, and the technical analysis for the SPY for January 21st, 2026. And with that said, let's go ahead and jump straight into the data. Now, again, there was no real noteworthy data for Tuesday, but we did have the ADP employment change weekly. Um, it did pull down slightly, and again, we've been talking about this report how it's going to be constantly going from the negative to the positive in the short range. I don't know if that's the word to say it right now, but in the lower range of the positive, I guess. Um, Many are expecting this to start pulling back up towards the, 30, 40, 50,000 a week. I have not been seeing signals of that at all. And going over the Fed's beige book last week and everything else, I still have not been seeing strength in the labor market, even though we have been seeing the jobless claims, seeing a little bit of weird numbers between large negative and large positive results. So we do need more data, but again, this is not good. This needs to be a lot closer towards that 50,000 mark to really solidify growth. This is really showing deterioration in the labor market still. But going into tomorrow, we do have quite a bit of data. We have President Trump speaking at 8:30 a.m. Again, I have no clue what he's going to be discussing or talking about, but the market generally tends to react, pretty aggressively towards what he says one way or another. Now, at 12 p.m., we have the Atlanta Fed GDP now. They are anticipating that to be at 5.3%, same reading as last time. Um, Again, I anticipate the GDP pulling downward. The GDP has been highly inflated with the exports and imports, especially the imports. So until we really see that shift, I'm not going to be looking at the GDP in terms of seeing growth. And again, unless we see major macro shifts from the labor market, from consumer spending, those type of, macro conditions have to be present for me to say that, okay, we're going to start seeing GDP growth. This isn't real GDP growth yet. This is the lack of imports and exports. So with that said, enough of that spiel. We do have the 20-year bond auction at 1 p.m. It is important, but again, with today's price action throughout the treasuries, seeing the yields starting to pull back upward, we saw the 10-year pull up towards the 4.2%. Um, Very likely the 20-year bond auction tomorrow is going to come in probably around that 4.8 to 4.9%. I'd be very surprised if it is a good auction. Again, yesterday's or I guess today. Today just had some very, very, very nasty price action for the market. So, again, I'd be very surprised if we see that come in positive. They'd be really pricing out the long end and entirely ignoring anything in the short end. So that's it for the data. Now for the earnings today, we did have Netflix. Currently they are down over 5% in the after hours. Well, I guess it's the evening now. So the overnight market, they're down over 5%. So I'm assuming Netflix did not do very well. We also had IBKR, some other interesting names. Nothing I was really interested in. If anything, it was Netflix, but Netflix did not do well. For Wednesday, again, I'm not really looking at anything there. For Thursday, I'm looking at Intel. I won't be playing any options or anything on it, but Intel's a very, very consistent and strong company overall. Uh, that's been around in America for a very long time. So uh, I'm definitely interested in seeing what they're doing, whether it provides real price action for the market or not. That kind of is irrelevant to me. But I am interested in the company. Um, what else? Nothing really else I'm interested for this week. Now there is Schlumberger. I thought it was a bank, but apparently it's actually an oil company. So those of you who might have had it on your banks list, like I did, make sure you put it on your oil list. Thank you for mentioning that in the comments, by the way.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting right into the technical analysis, today will be a fairly quick one, as we did have a lower Bollinger move. We did talk about that in Sunday's video, how if we see some major selling, that with these rejections of the upper Bollinger, that it creates this really scary range of basically very large sell-offs. It's been extremely consistent. Now, granted, I was overall bullish moving into this. Um, those of you who have been watching my videos for a while, you know that we've been tracking this structure as a, predominantly bullish structure. We have continuous cups being filled. We have a very large inverse head and shoulders, which is suggesting more upside bullishness. From that inverse head and shoulders, we have a bullish cup and handle, suggesting again further upside, but we did not get that. Obviously we had a very large sell-off, and this is just showing that the buyers are truly not here right now. And aside from the buyers not being here right now, um, this is also that moving average collapse that we've been discussing for quite a while, where we had it in this range where we had that very, very large potential where if the selling continued, we'd see the 5 mA pull underneath the 20 mA, and that would cause the 10 mA to pull underneath the 20 mA, and that would start causing the 20 mA to pull down to the 50 mA. Now, that did not occur at that period of time, but it is starting to occur now. With tomorrow's open, very likely the 5 mile will be around the 580, 560-ish range. It might be slightly higher, it might be slightly lower. Just make sure you mark it down because we did have a very large move today. So, um, that's going to move very, very drastically. With that said, we are going to be seeing the 5 mile pulling. It's already underneath the 10 mom, but it's now going to be pulling underneath the 20 mom. So when I'm looking for whether the market is bullish or bearish, that's one of the main signals I look for is the 5 mom crossing over not just the 10 mom, but crossing over the 20 mom. Once the 5 mom is below both of those supports, that's going to start slowly pulling those supports downward. So if we have continued selling from this point, then the 5 mile is going to kind of lead the charge in that. It's going to help pull those other supports downward, and it's going to bring a range of resistance towards the market that we can continuously can talk where we can continually reject and push further downward if we're going to see further selling from the structure. Now, with that said, we did secure a lower Bollinger move. Now, I have discussed the mechanics of upper Bollinger moves very, very often, and I did discuss the lower Bollinger mechanics that happened um, early or mid-November, during the 18th, 19th, 20th, whenever that period was. But what happens with lower Bollinger moves, and just like upper Bollinger moves, with the day one lower Bollinger being secured, and that means that the price was at or below the lower Bollinger, that means that tomorrow, very, very, very likely we're going to be seeing a lower low. And again, today's low was all the way at 676.57. Currently, the overnight price is at 679.27. So again, that's suggesting at least a whole $3, $4 downward from the current price range. Very, very likely we see a lower low. And from that lower low, that's when we start seeing consolidation back up to the 5 mile. Now, again, the 5 mile is going to be around, I want to say again, the 685, 60-ish range. If we get that lower low with the day two bottom Bollinger mechanic, then the 5 mile will be pulling downward the majority of the day. Very, very likely it'll be around the 684-ish range, give or take, on the next day. So come Wednesday or come Thursday's open, um, that would assume the 5 mile would be around probably around the 681. So that's where we can kind of expect that support to start building. Um, Now with President Trump speaking tomorrow, he can bring some major bullishness to the market. So if this gets entirely filled up towards the upside, I would not be surprised in the slightest. Now, again, with the lower Bollinger Day 2, we do expect bullishness from here. Okay, with that lower low, that's pretty much when I look for any form of equity buys, long-term call buys. So when we push this range, I will be buying long calls for the upside. Again, when we bought long calls here, many of us rode it all the way up towards this range and sold when we had that rejection, just in case we were going to have a continuously or continued sell from that range. But many of us were able to ride a lot of these calls for quite a while, and again, that was a whole $50 move to the upside. 30, well, not 50, it was $42 move to the upside, but you understand my point. Now, with all these bullish structures that have been going on, um, I am very inclined to say that I very likely will be expecting a fair value gap towards the upside. I'm not set on tech really breaking structure yet. We see semiconductors holding up extremely well. Even with today's selling, this is the SOXX, the semiconductor ETF. It's kind of like QQQ or something, or SPY. Only except this is strictly for semiconductors. It barely sold off today. Currently the overnight price is at 340. The high of the day was 343. So it only sold off, you know, let's see, the low was 335. So I mean, it sold off a decent amount. It sold off $7, $8 ish, give or take. But a lot of that weight has already been bought back up. Now, with Socks sitting here, not at the upper Bollinger, but not really pushing any major levels. It's not pushing towards this 20 mile. It just exited a fairly large consolidation range. So this still looks bullish. Um, just in the short term, semiconductors still look very good. Banks. Let's go ahead and check banks. And I'm not going to look at CRE. I'm going to look at the DPST, which is the times 2 ETF, but I tend to like that quite a bit. Um, this is a little bearish, but not super, super bad. This isn't pushing towards the lower Bollinger. This is just seeing minor consolidation, so the banks aren't really showing any signals of a massive sell-off occurring. We have the HYG, whatever you want to call it, which is the high yield corporate bonds. Sorry, I'm trying to find the symbol. We did have a little bit of selling today with this, but again, it's been very, very, very strong. over the last month and a half, 2 months. And even with some of the selling we did have in November, this has been telling us that we're still seeing major bullishness. Again, corporate bonds tend to start selling off when equities are at risk. We did have a little bit of a sell, um, but it wasn't nothing. It wasn't anything major. It wasn't any of these crazy candles that you see during some of these other sells. So, is everything bearish right now? Not entirely. Um, can that change very quickly with a lot of these symbols? Absolutely. If we see the continued bearishness, for example, if we see the day two lower low of the lower Bollinger, and from that range, we see consolidation instead of pulling upward to consolidate, we see the market price pulling downward to consolidate towards that lower price. Then that changes things a little bit. That is showing that the selling is picking up. Now, another good signal, and again, we will keep this fairly short tonight, is the VVIX. This is not the VIX. Remember that. This moves very, very quickly. Today alone, it had a full $10 move. So, with this being at this range, it's still at that very, very elevated selling range. We need this to start pulling back under the 98 to really suggest that the selling is going to end. Um, that's really what I'm looking for in tomorrow's price action is for the VVIX to pull upward further from this basically 115 to 120-ish range, looking for it to pull upward slightly more and then start dropping down towards that 98 and even further under that. And that will really suggest to me that the lower Bollinger Day 2 buying is kicking in. Um, the VVIX moves very, very quickly, very, very drastically. We can have a whole $30 movement on this in a single session. So if the buying's going to actually start picking up tomorrow, you will see it within the VVIX. Okay, don't make that mistake. Don't say that um, you start barely seeing it drop down. Don't be buying calls into that because very likely you're going to see the continuation. You need to see this drop down quite a bit to really show that the selling's done. Major money is out of a lot of their put positions. They're not having to insure the equity side too much anymore, and now they're expecting the upside, which that means that we'd pull back into this yellow range or potentially even back towards the green range. So yeah, that's pretty much what I'm looking for. I don't really want to go over TLT or anything tonight. That's something that really deserves its own video, and I do not have the time to do that tonight, unfortunately. Um, hold on, I just want to look at the spy very, very quickly. Now, with the drawing shown, I do want to show a couple things here. One is that very quickly back to the daily time frame, we did break out of this large buying channel again. Now, that can mean that this is going to, further push this selling channel down even more, and that this buying channel is going to basically be broken out of forever, or we're going to see support bought back up, and we're going to see this buying channel have a new support leg on it to base the bottom of the channel off of, and we will then be expecting further upside. So I know that's kind of a mouthful, but basically, we're expecting a very large bounce, or this buying channel is going to really start showing signals that it truly has been broken. That this rally is basically done, and that we're going to be entering into a quote unquote bear market. We're not seeing that yet, even though this buying channel has broken. This can turn into a very large support to the upside. Again, with tomorrow's lower low, that can turn into this type of move where that pushes us into totally new territory if I can actually drag the circle. basically pushes us to entirely new all-time high territory. So again, I will be bullish tomorrow. Um, if we see the market price pulling up to the 5 month prior to seeing the day two lower low, then again, I very likely will be bullish around that as well. But I want to see the 5 month tested to the upside while seeing the VIX pulling or the VVIX pulling downward. Now, again, what I really wanted to show here is that we have broken out of this bullish structure. So this inverse head and shoulders was not an inverse head and shoulders, it was a failed cup, which turned into a double top. That double top is now giving us quite a bit of liquidity to create this very large inverse cup. Now, with tomorrow's lower low, I do expect this cup to pull down slightly more, but we do have a lot of support ranges in here to grab. So this inverse cup does not have to pull down as far as what everybody's really looking at. I know everybody's looking at the gap right there at the 668. Um, I really don't expect this structure to pull us all the way back towards that range. It can, but with the day two lower Bollinger move, I would not be expecting that in the short term at all. We do still have these two liquidity ranges to contend with, and potentially they can be pretty dangerous. If we are going to truly be within this red liquidity range, then we're going to basically see price pull from the top of that range towards the bottom. Bottom of that range is where that 668 was. If we find the support to start buying up towards that yellow range, then very likely we see buying taken all the way from the bottom of this yellow range towards the top of that yellow range, which that takes us back up to the 685. That's kind of where the 5 mile will be tomorrow, so just be mindful of that, that we can see buying up to the, or that upside buying very quickly, take us out of these liquidity ranges very, very fast. So watch those liquidity ranges. We are back within this very large consolidation channel, and I did mention in Sunday's video how if we break into this consolidation channel and if the VVIX is starting to really go crazy while we're doing that, then the likelihood is we're going to pull to the bottom of that consolidation channel. The bottom of that consolidation channel is at the 673.78. That aligns very, very well with our lower low of, a day two lower Bollinger move. So again, be aware of that as well. There's a lot of reasons that when we start getting to the bottom of these major selling areas that we can start really expecting a lot of bullishness to the upside. So even though a lot of selling did occur, um, I'm expecting just a teeny bit more and then buying towards the upside. And I'd be very surprised to not see that at this point. So, with that said, tomorrow's going to be a busy day. There is not a whole lot of data, but potentially with President Trump's speech tomorrow, we can see a lot of volatility. So just be very mindful of your positions. If you're going to be buying the lower Bollinger Day 2 lower low with me, then I'm going to be taking positions all the way 3 weeks to about 3 months out to fully capture the upside from this lower Bollinger move. Again, lower Bollinger moves are some of the best times to be bullish because that's how you get absolutely huge moves. As always, thank you for watching. Again, be careful with your trades tomorrow. There could be a lot of volatility. But with that said, thank you for always watching. Thank you for the support. And I will talk to you in tomorrow's video. Take care, everybody.